If you ask most people what wealthy investors buy, you probably hear answers like cryptocurrency, startup companies, or risky stock picks. The assumption is simple. If someone is rich, they must be taking huge risks. But in reality, many of the world's wealthiest investors spend billions of dollars on things most people describe as completely boring. Insurance companies, railroads, utility companies, waste management businesses, consumer staples, index funds. Nothing about these investments sounds exciting, yet they continue creating enormous wealth year after year. So, why do the rich love boring investments? Because boring often means predictable, and predictable is incredibly profitable. Imagine you own a company that sells electricity. People don't stop using electricity because the economy slows down. They still turn on the lights, charge their phones, run their refrigerators. Your customers continue paying every month. Now imagine owning a company that depends on the latest internet trend. One year it's exploding. The next year everyone has moved on. Which business would you rather own for the next 20 years? The wealthy usually choose consistency over excitement. This idea goes against everything social media teaches us. Every day we're shown stories about people turning a few $1,000s into millions overnight. What we rarely see are the countless people who lost everything chasing those same opportunities. The rich understand a simple truth. You don't need extraordinary returns if you avoid extraordinary mistakes. Think about Warren Buffett. He's famous for buying businesses that most people overlook. Candy companies, insurance businesses, railroads, soft drink companies. Businesses people use every single day. Nothing flashy, nothing trendy, just reliable cash flow. And that's exactly the point. Wealth compounds best when it isn't constantly interrupted. Every time someone jumps from one investment trend to another, they reset their progress. Buying, selling, paying taxes, making emotional decisions. The wealthy often do the opposite. They buy great assets, then simply wait. Patience becomes part of the investment strategy. There's another reason boring investments outperform. Competition. Everyone wants to own the next revolutionary company. Very few people get excited about companies that collect garbage. But think about it. Garbage collection is necessary. Cities depend on it. Businesses depend on it. Homes depend on it. Demand doesn't disappear because it's boring. Sometimes boring businesses have some of the strongest competitive advantages in the world. Another lesson wealthy investors understand is durability. A company that's been profitable for 50 years has already survived recessions, inflation, market crashes, technological changes. That's valuable information. Survival matters. The longer an investment has proven itself, the more confidence investors often have in its future. Of course, nothing is guaranteed. Every investment carries risk, but boring businesses often reduce unnecessary uncertainty. The average investor confuses volatility with opportunity. If a stock price moves wildly every day, people assume something exciting is happening. But price movement doesn't automatically create value. A business becomes valuable because it earns money, serves customers, generates cash flow, not because its stock price is entertaining to watch. This is one reason wealthy people spend far more time studying businesses than stock charts. They're buying future earnings, not excitement. Let's imagine two investors. One spends every evening searching for the next big thing. The other quietly invests in diversified, profitable companies every month for 30 years. Who has the better chance of building lasting wealth? History suggests it's often the second investor, because consistency beats intensity when enough time passes. Boring investments also reduce stress. You don't feel the need to check prices every hour. You don't panic every time the market falls. You aren't constantly wondering whether you should buy or sell. Instead, you focus on your career, your family, your health, your business. Your investments continue working quietly in the background. That's real freedom. Ironically, the more boring your investments become, the more interesting your life can become, because you're no longer consumed by financial anxiety. You're allowing time to do the heavy lifting. Another advantage of boring investments is simplicity. Complex strategies often create more mistakes. Simple strategies are easier to follow during difficult times. That's why so many successful investors repeatedly recommend diversified index funds. They're not exciting. They're not glamorous. But they've helped millions of people steadily build wealth. The wealthy understand that investing isn't supposed to entertain you. It's supposed to serve you. Entertainment belongs in movies. Financial freedom comes from discipline, not drama. So the next time you hear someone bragging about doubling their money overnight, remember this. Most fortunes aren't built overnight. They're built quietly, patiently, almost invisibly, while everyone else is chasing excitement. The wealthy are often buying another boring asset that will continue paying them for decades. Because in investing, excitement usually comes with higher risk. But boring is often where the real wealth is created.